my number one rule is don't raise without traction. My second one is you really ask yourself, does my business need funding? Try to operate as if your business doesn't need funding. And the third thing is, if you ultimately think you do need funding, have an honest conversation with yourself and ask, by venture definition, is my business venture backable?
Hey, ladies and gentlemen, thanks for joining us for another episode of Epiphany Off the Cuff. Don't forget to subscribe so that you can be updated on any of the updates on any of the shows that we are dropping in the future. Today, I'm your host, Rick Meekins, and I'm joined by Hazel Haygood and our guest today. How are you, sir?
Good, and you? Thanks so much for having me on.
Awesome. Glad you're here. Hazel, how are you?
Doing fantastic. So happy to be back here.
Yes. Another episode. And today, even though we're pre-recorded, today's St. Patrick's Day, and you guys don't have green on.
I actually don't. I'm not even going to pretend like I do.
I have no idea. We don't celebrate that here.
So the deal is, on St. Patrick's Day, if you're not wearing green, somebody gets to pinch you. So I just changed my shirt like 5 minutes ago. Yes.
Mad.
It's a fun holiday. It's a fun holiday. Everybody seems to get in it. So again today,
That's cool, and I'm wondering what St. Patrick has to do with that.
You know what? I can't even have that conversation. I'm not even sure. Mateo, do you know about that?
I have no idea. I just know people wear green and get drunk. That's
I just know you guys throw
Patrick's
parties
in Miami. Yeah.
That's pretty much what I know about it too. Awesome. Well, again, ladies and gentlemen, we have today Matthew Vega, and we are going to talk about his journey. Matthew, you've had a lot. You've done a lot, and you're still doing a lot. I was just reading through a little bit of your bio. Can you give us a little background on you?
Yeah. So on the non-business side, I have a funny, essentially childhood. I grew up in Miami, Florida, but when people think of Miami, they think about the beach. They think about downtown, and even the Keys down south. And for us, I had a unique background. I grew up in a small neighborhood called Horse Country that was within another community of Miami called West Kendall. And over there, it was completely different. It was 30 minutes from the beach, but you felt like you were hours away from the beach. I grew up on a small farm, riding horses, playing with animals, waking up to the sound of chickens every morning. So I had a very unconventional childhood compared to most people in Miami. And then I grew up playing basketball as well. And I ultimately, when I was going to college, I had a couple of different opportunities to go play at different schools. And I ended up getting into a dirt bike accident where I destroyed my foot. And unfortunately, when you're 5'9" and rely heavily on athleticism, once you break your foot, all the coaches want to go out and recruit the young bucks who don't have any issues. And so I ended up I ended up losing a lot of the recruitment. And then I ended up at a small school called Babson. And that was in the middle of nowhere. And I'm going to sound like a dinosaur now, but this was really only like 4 years ago. Back in around 2017, 2018, there weren't like DoorDash and Ubers of the world. And so over there, if you didn't have a car on that campus, you were kind of isolated on campus. And so ultimately,
COVID, huh?
way back before COVID. So ultimately, we ended up starting the business around there. And again, that was funny. I never wanted to do a business. I never wanted to start a business. And my mom was an entrepreneur. She was a third generation horse breeder. My dad dabbled in starting his own thing in real estate as well. And so I grew up around entrepreneurial spirit, but it was funny. I just wanted to go on Wall Street. And so because my goal was, if you made $100,000 a year, you were rich. And so my goal was to make $100,000 and go work on Wall Street. And then sure enough, I ended up in tech because my brother wanted pizza and thought, oh man, it would be so cool to rent another student's car out and go pick up the pizza. And he didn't know how to code. I was always interested in it a little bit. And so I said, let me try to build that. And that was ultimately how we had the idea for the company. And that's how I went from farm boy as my girlfriend likes to call me, Tech Boy.
Farm boy to tech boy.
Yeah.
Oh, that's too funny. That's too funny. So the name of your company is Lula.
Yeah.
Tell us a little bit about that too.
Yeah. So I know I'll probably get asked, or somebody's going to be wondering where the name comes from. So I'll just check that right off the box. So we wanted it to be something that was synonymous with a company, and we wanted it to be 4 letters, 2 syllables, something that easy to pronounce. So we started looking for different words in other languages that meant like convenient, affordable, accessible, and we ultimately ended up coming up with a list of words. And a lot of my family doesn't speak English. They're primarily Spanish speakers. And so I went back to all of them. I also had a couple of roommates at that time that weren't from the States. And so I asked them, and I was just like, what's the easiest word for you to pronounce? And they all said Lula, which is convenient in the African language Zulu. And so the original name of the company was Lula Rides. And so it would translate into convenient rides. And then once we pivoted or changed, the business matured a little bit, we got rid of the rides part and just left it as Lula. But the history, as I mentioned a little bit earlier, we wanted it to originally as an idea to go pick up pizza. Like, let me rent another student's car and go pick up the pizza. Obviously, there's other use cases, but that was ours. And what happened early on was insurance companies didn't want to work with us. They thought the idea of 18-year-olds renting cars from other 18-year-olds was absolutely ludicrous. And so we went back to them and told them, hey, you're not just going to accept any 18-year-old. They're going to have to fall within some sort of underwriting criteria. And the insurance companies were like, okay, that seems interesting. And then I'll never forget, at the end of the first month, they sent me over an Excel sheet with 6 columns. And they told me anytime there's a claim, you have to file it with this Excel sheet. And anytime there's policies or usage to report, you have to send us, again, everything on this 6 column Excel sheet. And it was super inefficient. It was super lackadaisical. And the last thing I wanted to do was go in inputting data one by one. And so I ended up developing my brother and I ended up developing a bunch of tech to automate the entire process. And so we essentially built this internal insurance infrastructure to manage the insurance side of the car sharing business. And we ultimately ended up scaling that business to have members on more than 500 campuses in all 50 states. We were the second biggest car sharing app in North America. And this is what we were using the entire time to manage insurance. And we did a really good job. And when COVID shut down college campuses, we were trying to figure out, okay, what are we going to do? College campuses are not going to be open till God knows when. The business has to survive somehow. We got a call straight out of a movie. It was like out of a movie. It was the U.S. military saying, hey, we're trying to launch a car sharing program on military bases in Germany and the United States. The insurance companies want us to vet drivers, administer policies, and manage claims in a specific way. They say, you have the technology. Can we license it from you? What? And so it was this crazy lifeline in a time where we needed it most. That's why I say it was like straight out of a movie. I don't know if you ever watched the movie War Dogs, but the scene where the 2 young guys are negotiating with the military for what something's going to cost, that was us. And I'll never forget, they ask us what it's going to cost. My brother gives some high-ass number, and I hit him. I'm like, you just cost us a deal. And sure enough, the guys on the other side of the phone are just like, oh, if it were anything lower, we'd be concerned. Let's do it. And I was just like, excuse the language. I literally told him, I was like, motherfucker, how much should we lowball ourselves? And so we ultimately decided to do there was repurpose a lot of the software that we had built for this insurance infrastructure. And we decided, let's make it accessible to other companies through an API. So the way that Stripe provides companies with their payment infrastructure, we would provide them with our insurance infrastructure. And so that's how we make the jump from car sharing into being an insurance API company. And we ultimately end up launching the business in August 2020. And we were just providing insurance infrastructure to car rental and car sharing companies. And what we quickly realized were 2 things. The first was, that this technology could be utilized in a lot of different industries. Like, even though it was car rental and car sharing, the technology to vet users, organize and administer insurance policies, and manage claims can be utilized in a lot of different things. Even like an e-commerce side, like if I want to buy an insurance policy for my shoes, I still have to figure out how I'm going to be priced. I still have to organize those policies, and I still have to figure out how I would manage claims. So we realized this tech could be utilized in a lot of different industries. And the second thing that we realized was that it enabled what we refer to as episodic insurance. And so if you think about insurance today, how it's historically been done, it's on very general 12-month policy basis. The underwriters assess risk once a year, and that's upon renewal. When in reality, risk is always changing. It should always be monitored, and that these insurance incumbents don't have the technology to do that. And if you think about it, life is made of episodes, and there's no reason why insurance isn't. And an episode can be a 45-minute Uber, a 3-day car rental, a 3-day Airbnb. If I have a truck that's being dispatched from Miami to California, that's an episode in and of itself. And the insurance companies today, like I said, are pricing everything on 12-month, very general basis. And their attempts to do anything episodic or activity-based hasn't necessarily worked out as well as they like, because they've never had the infrastructure to get that granular and real-time data. And so that's ultimately what we're building.
Wow. That's amazing. That's cool.
There's a lot to unpack here. It's so very inspiring to hear. And, Lulu, you guys are growing at a very rapid rate right now. How are you managing scalability for your business at this point?
Yeah, I think one of the things that we've been very fortunate to have is a panel of great advisors and great investors. And so we are fortunate enough, and I say this not to brag, but I say this kind of to give a little bit of inspiration to the founders that are out there. We've now, in the last year, raised about $27 million from groups like Founders Fund, Coastal Ventures, SoftBank, and all that. And the crazy thing for me was 2 years ago, no investor wanted to touch us. Like, for the first 4 or 5 years of the company's life, no investor wanted to touch us. And we just kept grinding away. And Keith Rabois has a really great quote that he says, product market fit is forged, it's not found. And so we kept that with us ourselves. And so once we got a lot of these investors and advisors onboarded, we went from being a team of about 5 to now we're almost 50. And so having them being able to lean on them and be like, hey, how did so-and-so recruit when they were growing rapidly? And then them essentially giving us playbooks or giving us access to the founders we once looked up to and being able to ask them. So being able to access their recruiters has been an incredible opportunity to scale and learn. Being able to access a lot of their own founders, so that if we're facing some sort of dilemma like, hey, look, we think we're going to 10x a business, I have absolutely no idea what that's going to look like from a personnel perspective. Can you point me in the direction of somebody that's done it before? And literally just having to be a sponge, I'd say, is the way that we're managing with all this growth. It's being very self-aware that I've never done something like this before, but being open enough to go out and just find people that have and that I respect and listen to whatever advice they have. I mean, I think that's really the way we're dealing with everything right now. It's just leaning on the words of other people and then mixing that in with our own experience and what we're seeing in the current environment.
I love that. It's like a way of saying that, in order to thrive, leave your ego out the door and reach out to subject matter experts.
Exactly. I see myself all the time. I'll see a seed stage company has no money raised or whatever.
Yeah.
But if I hear that they bootstrapped and they hit $1 million run rate within X number of time, I don't care what your background is. You must be doing something exceptional, whether that's marketing or something. And I want to go talk to you. If you're a solo founder that's doing $20,000 in monthly recurring revenue out of out of your living room, I want to go talk to you. I want to learn what strategies it is that you're using. So you definitely have to leave your ego at the door and go learn from others the best that you can, because that's really the only way you're going to level up at this game.
Yeah, definitely. Do you have a formal advisory board, or you just is it rather informal?
It's pretty informal, and so we've been very fortunate to surround ourselves with good people. And the example that I always use is, if you're driving on the highway and you see somebody with their hand up asking you for a ride, as messed up as it sounds, you're probably not going to give that person a ride or stop or even think about stopping to help them. But if you see that person all sweaty and tired trying to push the car, you're going to be like, shit, I'm more inclined to help that person. I think that's ultimately what happened with my brother and I. We came from humble beginnings, and people saw just how hard we were trying to work because we were two college dropouts, grew up on a farm, had no business in tech, but they just saw us grinding away. So when we would reach out, I would reach out with the subject line, young founders seeking help. And I think people saw in us just how hard we were working. And so over time, we just started getting more and more people are just like, hey, here's my phone number. If you ever need anything, call me. And more often than not, I would actually call them. And again, you take an interest in the person as an actual individual, not just from a transactional basis. And Absolutely. It allows you to establish these relationships that, yes, they're informal, but they're probably much more beneficial than something that is formal. Because at that point, even if it's just an official advisor, it's more of a transactional relationship. So they're not necessarily too invested in you as an individual. Whereas the way that we did it is informal, but we now know these people's family names. We know what it is that they're doing for the weekend. We know what it is. So the conversations are different. We're able to get much more into the nitty gritty and have much more fruitful conversations. And it's just helped us along the way. Now I have a bunch of people I can call if I need something like financial models or figuring stuff out on the insurance licensing side of things. Like it's been really nice doing it that informal route. And some people might say the formal route's better, but I've always enjoyed the informal route.
I got you. Are you still coding as well, or are you just doing more leadership and developing the business?
Yeah, so at this point, it's just like leadership and developing the business. I haven't written a line of code in probably 2.5, almost 3 years. And so even when we were repivoting the business, we were able to bring back some of our engineers from the first version of the company. And so I was able to lead a lot of the architecture of the early API. Nice. But at that point, it wasn't necessarily me actually writing the code. It was me putting together the schematics in the back end and then working with some of our developers to actually have them start building it.
Cool. Do you miss it?
Sometimes I do. I'm so rusty now. I'll probably write the worst code in the world, and I'll see some of the cool stuff that the developers put together, and I'll just be like, "Fuck, man! I wish I could still build some of that cool stuff."
I hear you.
Give me your take on this, Matthew. So if someone is listening to us today looking to start a business in the technology industry and they do not know how to code, are they doomed to fail, do you think?
Absolutely not. I learned how to code. I learned how to code on Google. My brother says it all the time. You have the worst app. You built the worst app that was ever allowed on the App Store. It was absolutely hideous. And the Stripe integration was so bad that it only worked 50% of the time. So there was always times where students were Venmoing each other, paying for the trip. So that's the first thing I'd say. And then on the second part, I'd also say is with all the no code tools that are out there, you can build 99% of the ideas out there on a no-code tool like Webflow. People don't realize you don't need a mobile app right off the bat. Start off with a web app. Just go onto Webflow. You use a servicing fee for $200. If people are really going to use your product, it doesn't matter if it's on web or mobile app. They're going to use it either way as long as it's actually providing value. And so instead of spending 6 months trying to raise money from investors for just an idea, and then another 6 months just trying to build it, go onto Webflow or go onto Square or WordPress or anything and build it yourself. And you can get it done over a weekend. You're going to save yourself a lot of effort from trying to raise, because raising is a nightmare when you have traction. So imagine when you don't. So you're going to save yourself a lot of time. You're going to save yourself a lot of discouragement. You're going to save yourself a lot of trouble, and you're going to learn a ton. And the best part about it is if you start getting traction and you have numbers to show on that little minimum viable product, anybody's gonna want to give you the resources to actually make this into a business. And so you're not doomed if you can't code. Like, I kid you not, I could build the very first version of Uber, Airbnb, Lyft, and a lot of other companies on just a Webflow or WordPress website if you give me 10 hours. And I learned that off YouTube. And so you could do that too if you just spend a weekend watching on YouTube how to build Webflow or WordPress apps. And again, it's not going to be the program that ultimately takes you to unicorn status. Like, you'll actually need to get better development. But for the early days when you're just trying to figure your stuff out, you can definitely go use one of those no-code platforms or tools. And if you don't know how to code, you're not doomed to it at all. Like I said, my brother has no idea how to code, and he's doing well for himself.
That's cool. Yeah, I totally got you with the web app. So I guess the next question is, I mean, you've gone through the process, you've kind of developed your minimum viable product. How do you get traction? How do you get the word out, get people to, get involved with your product?
Yeah. So again, for us, it was just a lot of scrappy stuff. So like the first version of the company, the car sharing app was literally just leaving flyers all over campuses. Like that was it. Like there was no, like within leaving flyers all over campuses, a lot of partnerships. So like the basic partnership that everybody thinks of when they go onto campus is Greek life. And so we obviously tried that. But one of the things that people don't realize is the minority-based groups are actually the best groups to work with. And so every time I saw there was like a Hispanic group on campus, I would go talk to them. Every time I saw there was like an African-American student assembly, I would go talk to them. Because what I realized was everybody wants to go talk to the Greek life. They're like the cool kids on campus. But in reality, when you start talking to some of these organizations that haven't had the same opportunities, that's where you get the people that are really going to go out and kill for you. That's where they get really hungry. They're looking for opportunities. They want to work. And so we would partner up with these specialty groups on campus, and it was amazing. Like, we would find people all the time where I was just like, shit, if we had the budget, I would love to give you your first job right out of college because you've been so incredible. And then also, so like that was one big tactic. Like whenever we were launching on campuses, there was like specific groups, like for the Hispanic assemblies, like I'd go in and I'd bring the Latin flair and build a rapport there. But then also we would also reach out to some of the other groups on campus, which was really helpful. And then on the flip side, there was a book called Traction by Gabriel Weinberg that it essentially walks you through almost 20 different traction channels, most of which most people don't even consider. And so we used that book, and that was essentially for a period of time like our business Bible. We did everything that book did. And I honestly think that book is the reason why we became a top 100 app within 7 days of launch, because it shows you so many different things. And I kid you not, we probably did 15 of the 20 traction channels that book has to mention. And so because we tried so many different things, one was bound to hit. And that ended up being like student media sites. Again, you're working with these specialty groups. We did some Instagram ads, which were really great. We partnered with different influencers. And this was back when, again, it's crazy how much the market has changed in the last 4 or 5 years. Influencers back, you could get some of these, like, not Barstool Sports, but smaller versions of like Barstool Sports and those popular college Instagram pages. you get a lot of them back in the day for just a couple $100 to put ads, and they had hundreds of thousands of followers. And so they were like $5,000 or $6,000 in market spend. We ultimately ended up becoming one of the top 100 apps in the App Store. And then we put together a referral campaign. And that referral campaign worked out really well. And I just want to state that it all sounds really nice, but throughout this entire process, the unit economics on the business were horrible. We were growing much quicker than we anticipated. So server costs were much more expensive. And so the business was actually, like I said, on the high level, it sounds like everything was going great, but it was an internal shit show because we were always on the verge of bankruptcy because we were so strapped for cash this entire time. Like we were barely getting by off the transactional revenue on every trip.
Yeah, that happens. There is that dark side.
Yeah.
So can we just hone in on that a little bit? So you mentioned that basically you started off from rock bottom, and I don't know if this came up in your research, Rick, but I read that apparently in April 2019, Matthew, you guys were given the badge of honor called Most Rejected Founder with 531 rejections out of 532 investors. But then fast forward to 2021, and by that point in time, after 2 years, you had 40 plus firms fighting for Lula's Series A. And, that just blows my mind, So I just wanted to hone in on how that process looked like for you from being on a rock bottom to rising to the level of success that you have right now. And in terms of funding, getting any new business off the ground in the first place is not at all easy. And, to lump that in a hyper competitive industry like technology, and it can be, particularly challenging. You'll have to, drum up capital in order to make it. So what are the things tech entrepreneurs need to consider when seeking funding for a startup company?
I think there's like a bunch of different things, and I'm glad you saw that tweet from 2 days ago, and you're absolutely right. We ended up, I think overall that year in 2019, we ended up getting it rejected by more than 600 investors overall. We ended up getting rejected early on in the company's life by Y Combinator like 6 or 7 times. And so like we had it rough, and it wasn't even, again, it's not like we had a bad business in terms of like we weren't growing or anything. It's not like we had a bad pitch. Like we had that pitch perfected to the T. We had that hockey stick growth, but what ended up happening was around the time that we started going out to raise capital, with Uber and Lyft were going public, and so everybody saw how bad their unit economics were, and so everybody said, if Uber and Lyft don't have a path towards profitability, and they have hundreds of millions, now billions of dollars raised, what makes you think you're going to be able to do it?
Yeah.
And so again, it's not like we had a business that didn't have traction. Like we had a shit ton of traction. It was just what was out there in the market was killing us. But what I would say is, the first thing I would say is to people trying to raise capital, like capital is raising the full-time job. But capital raising the full-time job, that even if you have traction. So if you don't have traction, it's just an absolutely nightmarish experience. And that's why my brother and I actually despise raising capital. Like I am so jealous that anytime I hear somebody bootstrapping their business, I think it's the most badass thing in the world. But what I would say is the first thing is ask yourself, is my business venture backable? And so a venture backable business is typically one that can get from $0 in revenue to $100 million in revenue and within 5 years. And so the whole thing is, in year 1, you want to do about $1 million. In year 2, you want to do 3 to 5 million. In year 3, you want to do another 3 to 5x that. Year 4, you want to do another 3 to 5x that. And then year 5, you should be doing 100 million. So if your business isn't going to be doing can't realistically get to 100 million by year 5, by venture capitalists definition, it's not venture backable. There's nothing wrong with that. If you get to $10 million in 5 years, you're absolutely crushing it. So don't let tech Twitter tell you otherwise. And then on the flip side of it, most of these investors are looking for a business that at its best can get to a multi-billion-dollar exit. And so I remember when we were doing the car sharing app, we had investors look me dead ass in the eyes and tell me, I can't invest in this. And I'd ask them why. They're like, the best case scenario, I think you guys are going to get acquired for $300 or $400 million. I'm just like, that's not a bad exit by all. Like I would be chilling if I got sold for $300 or $400 million. And they would look me straight in the face and like, no, when you realize what venture capital is, you're investing in dozens and dozens of startups with the expectation that just one was going to hit and pay for everything else. And so that's why they're seeking a company that can sell for a multi-billion-dollar exit or get them a crazy return, because if they get something in the millions, chances are it's not going to pay for the rest of their losses. And so that's like the first thing I would tell founders, like, first, operate as if you don't need funding. If you ultimately think that you do need funding, ask yourself, is my business venture backable? Because if your business isn't venture backable, you're gonna go out there. A lot of people are gonna tell you it's not venture backable. You're gonna be discouraged and be like, shit, do I have a bad idea? And reality is you're not. It's just not by definition what investors consider venture backable. And again, that's not a bad thing by any means. The other thing that I would say is, do not consider raising capital unless you have traction. Like I said, you can always build a much simpler version of your product using stuff like Webflow, WordPress, all of that. You can always build a much simpler, and that's going to cost you a couple $100. And you can prove if your product is something that people actually want. Like my brother and I, for instance, people love the story about our Series A. We raised our Series A from the first pitch to the day we signed the term sheet was 17 days. A Series A on average takes about 4 to 6 months to raise. So like when the question is, how do you raise the money so quick? We went in there with a bunch of traction. Like my brother and I could have probably raised a Series A in December of 2020 with the metrics that we had, but we ultimately decided not to do it until closer to summer 2021 because we wanted to make sure we had the traction. Because we had tried raising capital with limited traction and it was just a nightmare. And then I'll even give you like another example. Like when we were pivoting the business, the way we actually got those early customers was going door to door around the Miami International Airport, asking all the car rental companies which one of them needed insurance infrastructure. And we ultimately ended up putting together about $1.2 million worth of contracts. And we took that $1.2 million worth of contracts between all these companies. And we went to investors and said, hey, look, we have X number of dollars in contractual value. We need X number of dollars to actually build out the tech for this. Please give it to us. And look, we already have traction. And we got investors that offered us term sheets within 24 hours for our seed. And so this was something my brother and I had never seen before. We went from being, like I said, the most rejected founders of all time to all of a sudden having investors say yes within hours of meeting us. And again, all that was attributed to traction. And so my number one rule is don't raise without traction. My second one is really ask yourself, does my business need funding? Try to operate as if your business doesn't need funding. And the third thing is, if you ultimately think you do need funding, have an honest conversation with yourself and ask, by venture definition, is my business venture backable? And I think that's going to make your life a lot easier. And just like the final point that I would add there is really become a student of startups. Because I think what happens if you just follow TechCrunch and Tech Twitter, everybody wants to normalize success. The internet loves to normalize success as if it's just a straight shot there, when in reality, I think the overall startup and tech community has to really normalize struggle. And that's what I love about some of the other shows, like How I Built This. How I Built This was probably the best thing for my mental throughout the entire process, because if you listen to them, you listen to Brian Chesky from Airbnbs, Whitney from Bumble, Melanie Perkins from Canva, you listen to Damon John from Fubu, you listen to all these different founders, and if they have like a good hour and a half that they have to talk about their stories there, and they all talk about the struggle. And so if you become a student of startups and you start listening to podcasts like that, and I imagine you guys probably do a little bit of the same based off the question of being asked, you focus on the struggle, you start to realize as a founder that it's normal to go through struggle. What's not normal is to just have a straight shot to success. And so when you're doing stuff like fundraising, if you go in knowing that you're likely going to not get a positive response from all the investors or if you go in from each conversation expecting not to get anything, it's going to be much better for you dealing with everything. Because when they do say yes, you're all of a sudden going to have this moment of this dopamine hit, and it's going to be an incredible feeling. You're just going to want to start chasing that.
Yeah, absolutely, absolutely. That was really great points. I think the one thing that sometimes as founders is not appreciated is that struggle. Is that that day in and day out, and it's not just the the rejections, but it's the time frame. Right. I mean, it's as you said, sometimes it is months. I mean, what was, we've got a few minutes left. I mean, what was the hardest part, or what was, something that was really perhaps hard to come back from? But, obviously you're here now, and you're in a very good place.
Yeah, I'd say by far the toughest thing was the mental battle. Like back in like. Sure, like right now we're putting, like early on, we got rejected by 47 different insurance companies. They thought the idea of 18-year-olds renting cars was the stupidest thing ever. And so like people think, okay, putting together that insurance program must have been tough, and they're absolutely right. But by far the toughest thing was the mental battle. How do you come back after 24 insurance companies that told you that's not possible? How do you come back after 42 of them have told you that's not possible? These are people that are respected in the industry and have been around for more than you've been alive. When we were going through a venture raise, how do you react after that 521st investor rejects you? How do you make it so that investor 526 says yes? Like the mental battles by far. I remember during when COVID shut college campuses down, and we had already run out of money by then, trying to figure out how is that I'm gonna come back from this. I grew up on a farm. I dropped out of college. Really, the only thing I have to my name is a business that essentially was killed by a global pandemic that I have no idea is going to end. So the mental aspect of it was by far the most difficult thing. But my brother and I, we always had the mindset that we were blessed to be in this position, to be able to start a business, and we owed it to everybody to make the most out of the opportunity. Because I think back to all those other people that are in a position where like, shit, I wish I could start a business. And so I feel like if I don't make the most out of this opportunity, I'm letting them down. I'm letting myself down, because I think there's a certain potential that we can fulfill. And for me, I'm motivated intrinsically. So I'm trying to chase that self-motivation, that self-drive. And for me, it's all about fulfilling our potential. And so the mental battle was the biggest thing, because I always knew what our potential would be, and I knew it would kill me if I didn't fulfill it.
That's awesome. That's awesome. I'm sure a lot of people in this, we'll call it the battle, we'll call it the journey, can totally relate to that. It is the, the day in, the day out, the mental, killing. I mean, you've got, people looking to you, you've got employees, you've got teams, they're looking to you for guidance, and you're like, okay, how are we going to get this done? You don't necessarily have all the answers, right?
Exactly.
So cool.
I mean, just like the last thing that I would say, and really just hone in on a little bit more, is just sure. Like to all the founders that are listening to this right now, like really make sure to become a student of the startup game. Like I always loved Kobe, because Kobe really became a student of the game. Like take that mentality into startups and study, because the one thing you're going to realize is just how regular it is to feel like an idiot. Like the amount of times I've asked myself on this journey, am I stupid? Am I crazy? Is this actually going to work out? Like it's far more than you would imagine. And you have to realize that that's completely normal. The nights where you want to cry, where you want to scream, where you want to pull your hair, like don't let anybody tell you otherwise. All those people that you see on TechCrunch that are raising large amounts of capital, like they've all been in your shoes where it's like, what next? And so don't ever think that success is normal. For me, I started when I was 20 years old. So if people see my brother and I now, they're like, holy shit, you're so young. It must have happened so quick. reality is I started this journey 6 years ago. I just started really young. And so, and it's the same thing with a lot of these young founders. It takes us years and years to get here. So don't think that, that it's going to be an easy journey. It's going to be hard as shit. It's normal for it to be hard, but yeah, don't let the internet tell you otherwise. None of those things are overnight successes.
I love that.
Cool. Thanks so much for that.
Of course.
So what's your next step right now, Matthew?
We are the next step, and I'm really excited about it. Is we're going to be launching a product in a couple of quarters where, regardless of what type of insurance product you want to do, like if you want to insure cupcakes, on your website, we're going to give you the insurance infrastructure to actually embed insurance on your checkout screen and make sure that delivery of cupcakes is protected. And so that's probably the product I'm most excited about. We're really going to start pushing insurance on all the different checkout screens so that regardless of what it is, we can really make sure we're insuring every episode. And that's like the next step for us. That's a couple months away, but I'm so excited about it.
For sure. That is going to help so many people.
Yeah, I'm excited. That's outstanding. Well, thank you so much for being on the show today. We love talking to you. We'd love to pick your brain a little bit more. I'm sure you've been really influential for a lot of the startups, a lot of the founders, out there that are on that journey. I'm thinking of a few folks right now, that are in that early stage and they've got concept. They're, going down that road to, make their MVP. So certainly going to make sure they hear this episode. And, is it okay? Do you feel okay if people like reach out to you? I mean, you've put out mentors and stuff like that.
Yeah. Reach out to me on LinkedIn, on Twitter, whatever it might be. I'm fairly active or responsive on both. And so shoot me over notes on either one of those.
Okay. Awesome. We can, if it's okay with you, we'll put some of your information in
go for
show
it.
Notes for today.
Yeah, go for it. That'd be awesome. Thank you.
All right, cool. Well, this has been another episode of Epiphany Off the Cuff. I thank everybody for listening, for watching. I thank my co-host Hazel and Mateo. Thank you again for being here. We appreciate it.
Yeah. Likewise. Thanks so much for having me.
Thanks for watching another episode of Epiphany Off the Cuff. Please make sure to subscribe and hit the notification bell so you know when the next episode is going to drop. And don't forget, we're on podcasts as well, so you can catch us on your favorite podcasting platform. We look forward to seeing you on the next episode of Epiphany Off the Cuff.